Hey, what's up guys, it's Jonathan here. So recently one of the biggest finance YouTubers, Meet Kevin, made a massive shift in his portfolio. There's been a lot of talks from various creators about this move that he made. From watching the video that he posted talking about this shift, and watching some of the reaction videos I've seen, I wanted to make my own video discussing my thoughts about the situation. So in this video, we're going to discuss the move that Meet Kevin made in his portfolio, his reasons for doing so, and what my take is on the whole situation, and how I plan to invest in the markets. So let's get right into it. Just within the past week, Meet Kevin posted a video talking about how he has sold out of all of his stock positions, with the exception of AMC. And the reason why he kept his AMC position was due to a promise that he had made while he was campaigning to be the governor of California. He also held on to a bot put that he had on QQQ at that time. And in his video announcing this shift, he gave a couple of reasons why he decided to make this shift. He started off talking about the end of World War I and the 1920s. And he went into detail about some of the economic conditions that America faced during that time, when money was very cheap to borrow, causing mass speculation in the financial markets, which led to lofty valuations in asset prices. It also led businesses to borrow excess amount of monies to grow their operations, eventually led to the Great Depression that we saw at the end of the 1920s. And Kevin compares the Roaring '20s to what we're currently seeing in our economy today, where we have massive inflation in various goods and services, and also wage inflation on top of that as well. And he stated that we also currently have businesses expanding using this cheap money during nowadays as well, which is leading to excessive valuations in not only the stock but also the real estate market. And one of the major things he brought up was the amount of margin that has been used since the pandemic started. He compared January 2020's margin levels to the peak margin levels that we've seen during the pandemic in October of 2021. During that time frame, we see margin debt rise by almost 66%. Then he goes on to talk about, because of the inflation that we're seeing, the Fed is in a very peculiar spot where they need to do enough to cool down the high inflation that we are seeing, but they don't want to overdo it and accidentally cause us to fall into a deflationary spiral. He goes on even further to say that the market has lost faith in Jay Powell's ability to execute the Fed's dual mandate. When it comes to maximum employment, even Jay Powell himself during the most recent FOMC meeting said that he believes that we have reached max employment. But the other part of the Fed's mandate, which is price stability, they have greatly failed at. And because of the massive shift that Jay Powell has made ever since being re-nominated by Biden, that the public is starting to lose trust in the Fed's ability to be able to tame inflation. And Kevin goes on further to state that because of this loss of faith, news that would normally be seen as a positive to the stock market is currently being seen as a negative. He states that this is causing the market not to believe any positive news that they are hearing. He went on to talk about earnings season and how a lot of the earnings will cause a lose-lose situation. And basically this is because if a company comes out with earnings and they give bad guidance, that'll cause the stock to fall. But if they come out with a strong forecast, it justifies to the Fed that they should tighten the money supply, which causes a lot of the growth stocks, the stocks that make up a majority of Kevin's former portfolio, to fall in value as well. So either way, whether we get strong guidance or bad guidance this earnings season, the way Kevin sees it is that it's just going to be bad for the market overall. He went on to state that he believes that the market will not see any good news until March, after the Fed announces its first rate hike. And because of that lack of possible good news between now and then, he believes that could possibly be more pain in the market. And because of that, he's making this outsized bet of $20 million on this playing out. The best way for me to explain my take on the situation is to split it up into two different parts. So when it comes to his reasoning, I actually think he has a very legitimate reason. I agree with him that cheap money has caused asset valuations to rise very rapidly and has caused inflation to get out of hand. But I personally don't think that this will necessarily cause a recession, at least from what we know as of now. I do also agree that some of the valuations we see on speculative assets are very high. A really big concern of mine when it comes to the market over the past couple months, which is that outstanding margin debt. In my opinion, I think it's very high. It has been something that I have been concerned about, but ever since October of 2021, we have seen this number start to move to the downside, and hopefully this will continue as interest rates start to pick up, and it'll normalize the market a little bit more. I also agree with Kevin when it comes to his point about the market losing faith in J-Powell. I see the memes and the funny tweets and all that stuff all over social media, making fun of J-Powell saying that inflation is transitory. I personally think that the Fed should have stepped in a lot sooner to try to tame inflation instead of letting it run rampant and us end up in the position that we're in right now. I also agree with Kevin when he says that during this earnings season, basically all good news that we hear is pretty much bad news. I think right now the Fed is trying to figure out what is driving the markets currently. A lot of the statistics that they're using to determine the markets are lagging indicators. When companies come out with earnings data, that's a pretty good indicator to the Fed to determine what's going on in the market currently. And I definitely do think that we probably won't see any positive catalyst for the market until March. So now when it comes to my thoughts of Kevin's move to sell off a majority of his portfolio, I kind of do agree with him doing that, but I kind of don't agree with him doing that as well. And the reason why I don't agree with him, because one of the things he's trying to do is that he's trying to time the market. And I think that it's a very terrible idea to try to time the market. But in the case of Kevin, he has to time the market twice. He has to time getting out of the market, and then he has to time buying back in at the bottom, which is a very difficult thing to do. Another thing I don't really agree with when it comes to him selling is because of the current valuations we see in the market. So if you're selling in a market like this, you're most likely not buying in it. There may be a chance that prices fall even more, but right now there's so many good deals, in my opinion, in the market that it's almost like, how can I even pass this up? Right now, Hood is selling for 1.05 times cash. Another good case is Matterport. Matterport was once a SPAC before it went through its SPAC merger. And all SPACs usually start off with a par value of $10. And the last time I checked Matterport's stock price, I believe it was at like $8 or $9. It's almost like, how can you pass this up when you're paying less than the par value of the SPAC itself? I know there's a lot of SPACs out there that had some pretty lofty evaluations when they did finally complete their SPAC merger. I don't believe that Matterport is in that same boat. I think that Matterport has a lot of use cases in the future. They provide a lot of value to the customers that they currently have and that they will have in the future. Another reason why I don't agree with him selling, and this is probably the biggest reason for me, that Meet Kevin is known as Mr. Buy the Dip.
Push it, buy the dip, buy the dip. Here we go, come on, push it.
Because he's built his whole brand around buying the dip, buying, holding, not selling so you don't have to pay taxes, and all these other concepts of long-term investing. By him selling out of most of his positions, it almost makes it seem like he doesn't believe in Train America anymore. In some degree, I can see how fans of his work somewhat feel betrayed by him selling out in such a rushed manner. I'll be honest myself, I've even lost a little bit of respect as well. Because for me, it's almost like, why should I listen to somebody who doesn't even have money in the markets? But there are some parts of his decision that I actually do agree with as well. And one of the reasons why I agree with his move is because of his concerns of the market. I do think there are some things that I am concerned about when it comes to this market. Like I mentioned earlier in this video, I think that the next couple months will be rocky. But after that, I think the market will do pretty well, especially for the second half of the year. But the biggest reason why I say yes to the decision that he made is because at the end of the day, it's his money. And the thing about personal finance is that it's personal. And the various decisions that we make with our money is all dependent on our situation. You know, Kevin, he's married, he has 2 children. Right now, he's currently starting 5 different businesses. I know on one podcast, he talked about where he hired his own in-house CPA. I know he's been trying to hire a bunch of software engineers as well. And all of those people are all very skilled professionals that demand very high salaries. Honestly, like I don't dox Kevin, so I don't know every single thing about his life. But he probably does have some really good reason for selling other than just market fear. I think at the end of the day, even though I do feel a little betrayed that he did sell out, I do understand that there's so many different factors that may cause somebody to make a move with their money, that I do respect the fact that he was transparent with his audience and that he did make the decision that he thought was right for him. But personally, for me in this market, I plan on keeping my core positions. So that's basically all I got for this video. Thank you guys so much for watching. If you enjoyed this video, please consider hitting the like and subscribe button. They both greatly help out the channel, help push this video out to as many people as possible. Also, let me know in the comment section down below what you think about Kevin selling out of most of his stock positions. Also, check me out on all my other socials. I've been posting a lot more shorts recently. So if you're interested, check me out there. And thank you so much for watching. I'll see you in the next video.